that there's a lot of transactions actually going on. Any questions so far? You can just say yes, no, I mean, so I can continue. Is it clear so far?
There are no questions so far, sir.
Okay. Now let's dive a little bit in and see more metrics. So for example, another thing that we look at is what is the total number of active cryptos in the market as compared to the total number of cryptos. So as of right now, there are 12,563 cryptocurrencies of various types. And I'm going to get into that, or what are the types of cryptos. And out of which 7,200 are actively being traded. And the rest of them are what we usually don't consider, they are inactively being traded. Another very important metric is the active market pairs. I'll give you a simple example of what that means. So if you go to the shop behind your house, you'll be able to buy, say, Parle-G biscuits. But how are you going to pay for it? So you're going to use Indian rupees. So you can think in your mind that the shopkeeper is telling you that he accepts INR for Parle-G. So we can actually call that a trading pair, that Parle-G is available against Indian rupees. Maybe in future, he may even say, I'm giving it to you against the dollar. So then you can say USD to Parle-G is another trading pair. So what this represents is how many different trading pairs are available across the industry. And one very important thing that I would like to recommend to you guys is whenever you're investing in a crypto, make sure it has an INR trading pair. Because if you're based in India, your primary currency is going to be INR. And if that crypto doesn't trade with the INR, it is going to cost you every time to translate your INR into USD and then buy it. And then when you sell it, you will again do the reverse transaction. So you end up paying a lot of transaction fee. That's the importance of active market pairs. Then there are active exchanges. So there are 413 of them as of right now, out of a total of 1,491. This would include centralized and decentralized. So if you've heard about things like Uniswap, PancakeSwap, we call these decentralized exchanges. You don't have a central entity running them. But when you talk about things like WazirX, CoinDCX, Kuber, Binance, Coinbase, these are all centralized exchanges, and there's one company actually running them. Any questions so far?
No, sir.
All clear?
Yeah.
Okay. Another thing that we look at is DeFi statistics. Now, DeFi stands for decentralized finance. As of today, most of the decentralized finance transactions happen on Ethereum. So that volume is separately calculated. It's a much smaller figure, obviously. But if you are into staking, crypto lending and borrowing, then this becomes a very important statistic for you. And if you are an expert, then only I would recommend that you get into derivatives. Otherwise, derivatives are extremely complex. And many times you don't even know how to calculate whether you're going to make a profit or a loss, and you could end up losing your capital. So I would very strongly recommend, unless you're really, really good at it, don't ever get into the derivatives sector. Extremely complicated. You have questions, please feel free to interrupt me. Another thing that we look at, which is quite critical, is the concept of velocity. Now, I'll explain to you what that means briefly. You know, when the demonetization took place in India a few years ago, we said that for a few months, the entire Indian economy contracted. Now, why did that happen? Because for any economy, it is very important that money changes hands. If we just take all our money and lock it up into a bank, the entire economy is going to contract because money is not changing hands. Because you don't realize when you spend money, that's someone else's income. That person gets the income, then he spends on something else. So it's a cycle that happens. And at demonetization, because cash was suddenly withdrawn from the market, the entire Indian economy contracted. So velocity of money represents the rate at which money changes hands. And in the crypto industry also, it is a very critical factor. And that is why we need to monitor it. So if you look at the most important cryptos and we look at their velocities, you'll see a huge disparity. So where a Bitcoin shows you almost 2000, an Aave is 13, Sol, which is an extremely popular Solana, is 5. So that actually gives you some insights into how much transactions are actually happening. And I would always recommend that when you're buying a crypto, look at its velocity. And if it's a very low number, be skeptical, because then that means that that crypto is not actually being used much. Now, obviously, in case of Bitcoin and Ethereum, the reason they're very high is because most of the trading pairs are against them. So that is why a lot of the regular crypto transactions are happening in Bitcoin, Ethereum, and stable coins like USDT. So factor that in when you make your purchase decision. And a lot of you may not know about Bitcoin Cash. That's one of the first forks of Bitcoin. Happened, I think, in 2017. Very, very active crypto. And it has a good velocity level. Any questions so far? Yes, no, all clear?
None, sir. Not here. Not.
Okay. Another factor that you may be hearing about is what we call as dominance. So, as of right now, say the Bitcoin dominance is 44%. What does that mean? If we take the market cap of the entire crypto sector, how much of that is Bitcoin, how much of that is Ethereum, and how much is the rest? So Bitcoin is about 44.7, Ethereum is about 18 odd, and the rest is all the other 10, 12,000 cryptos coming. So this kind of gives you an idea about how important Bitcoin is and why when the Bitcoin prices move, the entire market gets affected because it is that heavy in the overall sector. 44% of the crypto is just because of Bitcoin. And if the day comes when Ethereum becomes more than Bitcoin, that would be called as the flippening. And a lot of people have been waiting for several years that it is going to happen. I don't know if it's actually going to happen, but we call that as the flippening if it ever happens, where Ethereum would flip Bitcoin to become the largest crypto. Is it clear? Any questions?
No, sir.
Okay. Now let's move ahead. I want to show you something. Yeah. Okay. So another thing is now, like I told you, there are about somebody's raised their hand. What's your question, Joshua?
Hi, sir. So I was just wondering, how do we get access to all of these metrics? The Future Money Wallet one. I'm on the website, but yeah.
You can just sign up for the Future Money Wallet. So you'll see a login or sign up link on top, and it's a free service. You can do that.
Okay, sure. Thank you, sir.
Most welcome. Now, the Future Money Wallet is my project, and I personally built it for myself because there are lots of sites which gives you metrics, but then it was not giving the kind of metrics that I needed, which is the only reason I built this site. And since I built it anyway, I've kept it open to the whole world. Anyone can use it. Now, in this, I can't track 10 and 12,000 cryptos. It doesn't make any sense, right? So based on my understanding of the market, I've narrowed it down to 20 cryptos. And these are the only cryptos that I follow. I don't look at anything else. Of course, then there are those new upcoming cryptos. That's a different thing. I can't put them here because they don't have a active trading yet. But out of the ones that are actively being traded, these are the only ones that I follow. I'll just give you a very brief overview. So Aave is what we use for lending and borrowing. So it's a DeFi protocol, you could say. ADA is the Cardano public blockchain. So as you guys know that I'm actually more a developer and architect, less an investor. So for me, public blockchains are more important because I build on them. So for my own organization and for our clients, we build tokens. And we build these tokens on certain public blockchains like Cardano. Algorand is another example of that. Then BNB, which is the native for the Binance Smart Chain. So you guys must have heard about Binance. Binance is actually three things. It started off as a crypto exchange with its own crypto called BNB, which is in the top 5. And now it also has its own public blockchain called Binance Smart Chain. So it's one of my favorites because the transaction cost is very low. So it's quite cheap to create on it and transfer assets around. So this is a very important one. Polkadot is another public blockchain. It's quite unique and I'm quite a big fan of it. Ethereum, of course, is the most popular as of today, but the problem with Ethereum is it's become very expensive. So every time you create a crypto on Ethereum or you transfer it, the costs are very high. And that is why I'm not very bullish on Ethereum in the long run, but as of right now, it is number one. Today, given a choice, I don't create anything on Ethereum. I'd rather do it on a Cardano, Algorand, Polkadot, the Binance, the cheaper options. And of course, Solana, which is absolutely the cheapest in the world today. Transaction costs are like virtually zero and speeds are phenomenal. One block is mined in just 400 milliseconds. So it's one of my favorites here. So these are the different kinds of public blockchains. Other than that, some of the coins that I want you guys to know about, one is called BAT, which is Basic Attention Token. Have you guys heard of the Brave browser? It's a very popular browser and it protects your privacy and it pays you for using the browser. So whenever you're using Brave and browsing different websites, they calculate that, and depending upon whether that website is a part of the Brave family, they actually give you BAT as a crypto free of cost. So you earn for browsing websites and doing your normal work. And I'm a big fan of this project. It was created by the guy who invented JavaScript, which is like the most important programming language in the world today in the web. And he also made the Mozilla Firefox browser. So I'm very bullish on this project. And as a content creator, I actually earn through Brave and BAT. So that's why one of the reasons I like it. Bitcoin Cash, many people don't know about, but it was the first fork of Bitcoin. So, Bitcoin, when it started, we all know it's slow, transaction costs are high. So some miners way back in 2017 said that let us improve the technology. Let us bring SegWit, segregated witness technology in, and let us make Bitcoin faster and better. Now, some agreed, some disagreed. So Bitcoin actually forked into two. And Bitcoin Cash was created, and whoever owned Bitcoin at that time was given the same number of Bitcoin Cash for free. And it's a very important crypto. Any questions so far? I hope I'm not going too fast.
No, so there are no questions.
No
as
questions,
of now.
Okay.
sir. Yeah.
Yeah, and I'm not going too fast, right?
No, sir, perfect. It's perfect.
No, sir.
Okay, great. Then, of course, we have Bitcoin naturally. Then we have Chiliz. I don't know if you guys have heard about it, but you've heard about fan tokens. Like the IPL teams are now starting fan tokens. Football teams have. So Real Madrid and all these football teams, as a fan, you can buy their token and then have a voting right in some of the decisions of your favorite sports teams. So CHZ is the public blockchain, or rather the public crypto. You buy that and then you go on to the Socios app and buy fan tokens for your favorite teams. So I think it has a very good potential because they rule in the fan token market as of right now. So that's the reason I really like this project. Polkadot I've mentioned to you. FIL is another very interesting one. It's called Filecoin. And I don't know if you guys have heard about IPFS, Interplanetary File System. So they're trying to create a whole new way in which data would be stored. So I'm sure you guys have heard of Airbnb. So what does Airbnb allow you to do? That if you have an extra room in your house, you can rent it out on a daily basis. Now imagine doing the same thing for your data storage. So say you have a huge rack or a server or a data center. Whenever you have extra space, you can rent it out. So consider it to be like the Airbnb for data storage. And the crypto for that is FIL, and the project is called Filecoin. FTT is a very important and a very popular crypto trading platform, especially for derivatives. And this is their native token. Link is the world's most popular oracle. So, blockchains need to get data from the outside world and they need to send data to the outside world. Because when you make an application, let's say you are making an insurance application, and whenever someone's flight is delayed, the person doesn't have to file for a claim. The blockchain will immediately give him the payout for the insurance amount because his flight got delayed. But how will the blockchain come to know that the flight was delayed? It needs that data from the airport authority. So how does the airport authority communicate with the blockchain? Through an oracle. So an oracle is like that connector or bridge between the outside world and the blockchain. And Chainlink happens to be the most popular, and this is their native crypto, Link. Litecoin is one of the earliest cryptos that came out, forked from Bitcoin, and it is quite popular for normal transactions. Matic, I'm sure you guys have heard of. It's an Indian project. I mean, in fact, one of the most successful, I would say the most successful Indian project. So what they're trying to do is, Ethereum is slow, costly. So Matic is trying to solve that problem by making Ethereum cheaper and faster. So they built a whole set of scalability solutions. And Matic was, the project is called Polygon, but their crypto is called Matic. Solana, I told you, is the world's most popular, and I mean, most popular, I wouldn't say, but the fastest public blockchain. Theta is a very interesting project. So the guy who started YouTube, he's one of the co-founders of Theta, and it's a video streaming platform. Yeah, somebody has a question, Tommy?
Actually, I have a question, sir. So
Sure.
so you just mentioned that Matic is helping making Ethereum cheaper. Can you explain, can you elaborate some more on that?
Sure. So now let's try to understand, why is Ethereum slow? So right, so Ethereum is a blockchain running on what we call proof of work. In proof of work, regularly certain transactions are bundled together, and then miners have to calculate a number called a nonce. So they are solving a mathematical problem. Now that consumes a lot of computational power and electricity, and the process is slow, which is why even Bitcoin is slow, Litecoin is slow. Now inherently that is a problem with proof of work. So what Matic has done is they've come out with a range of solutions. So for example, one of their solutions is a separate blockchain which runs on proof of stake. So automatically it becomes much faster. And that is running parallelly to Ethereum. Consider it to be like a side chain. So Ethereum is going separate, Matic is running separately, and from time to time, Matic pushes data onto the Ethereum chain. And so that is why it becomes faster, because all transactions are not going to Ethereum. They are being bundled on Matic, and from time to time, some data goes on to Ethereum to hook it and to continue with the blockchain. So that is the reason it's faster. I know it may still sound a little complicated, but it's slightly difficult for me to simplify what it means. But this is what it's doing. One of the methods is by running its own blockchain. And then they have created an SDK, a software development kit that anybody could download. And then you could create your own chains, or you could create your own scalable solutions for Ethereum. Does that make sense? Is it clear?
Yes, it's a lot more clear now.
Okay. So Theta is a video streaming platform, kind of like what Filecoin is trying to do to data storage. Theta is trying to do to video streaming. So quite an interesting project. They have two cryptos, one called Theta and one called T-Fuel. So yeah, some projects do have multiple cryptos also. Then we have Tron, which is again a public blockchain, quite good, fast, very cheap. Have you guys heard of BTT or it was the first file, BitTorrent. You guys remember BitTorrent from many years ago? Yeah, so Tron bought over BitTorrent also. And it's run by a Chinese guy. Recently he won the auction to have a lunch with Warren Buffett. So every year Warren Buffett has lunch with one person in the world, and there's an auction, and the money goes to charity. So this guy had won it, I think, a year ago and paid a huge amount of money for it. So it's quite a flamboyant character, and he's behind the Tron blockchain. XLM is Stellar, one of the oldest blockchains, pretty good, pretty cheap. And you can create tokens on it, or you can use XLM for transactions across the world. And the final one is Monero. That's a privacy coin. So, a lot of people think, yeah, Joshua, tell me.
Yeah, so no, I was just wanting to ask, like, I noticed XRP isn't on this. Is it because it has a very centralized nature that you have not put it on here?
Sure. So actually, I don't consider Ripple to be a blockchain. Actually, Ripple is not a blockchain. So I don't really consider it to be a true project, because for me, the crypto has to relate to a blockchain project, right? So even though if I take the example of Chiliz, CHZ is a public blockchain, but Socios is private, but it is still a blockchain. But in XRP's case, XRP is a crypto, but the Ripple platform is not a blockchain. That's why I don't consider. Hope that answers your question. The decentralization, I don't care much about, because a lot of these projects are not decentralized. Even Ethereum isn't as decentralized as people believe it to be. So honestly speaking, I don't care much for decentralization. Does that answer your question?
Yes, I got it. So, but I have another follow-up question. What did you mean when you say that Ethereum isn't as decentralized as people think it is?
Yeah,
Because,
so
no, because Binance is known to be sort of following a centralized, decentralized model to make up for the gas fees. Sort of.
So I'll tell you what happens. See, how do you come to know whether a blockchain is centralized or not? You don't, because all that you will come to know is how many nodes are there in the world. So say Ethereum has 3,000 nodes, but who is running these? Are these 3,000 separate entities, or are there 10 entities? Nobody really knows the truth. And I believe that just like Binance is not very decentralized, it's a few set of entities which run most of these nodes. See, because you got to understand what is the incentive for running a node, right? Running a node is costly. So why would I run the node? So random people don't. It is very few selected people who have a vested interest in the crypto who actually run the nodes. So most cryptos are not as decentralized as people think. I don't have statistics. Nobody has the statistics. But I would say, yes, Bitcoin is probably the most decentralized, because there are people like me who run Bitcoin nodes for no benefit. We just do it because we like the currency or we like the platform. But other than Bitcoin, nobody else is that decentralized. Does it answer your
Got it,
question?
sir. Yes, sir. But I was just thinking, because I do know some people who just said all you need is like literally an 8 GB RAM client server or a system to run an Ethereum client. So, and yeah, with regards to the allocator nodes and stuff, that you need a specific allocation of Ethereum. So I thought that lots of communities just pull in Ethereum and they just run nodes, because
No,
ETH is
actually not too many. I mean, logically, it isn't that expensive, I'd agree. Bitcoin's actually a little more expensive, but it's a question of following. But like I said, for me, decentralized, it doesn't matter. And I'll tell you why. See, in blockchain, we have something called the trilemma, that there are three things. There is security, there is decentralization, and there is scalability. And it is said that you can have only two out of three. So honestly, if you give me a choice, I don't care about decentralization, but I need scalability and I need security. So that's just the way it is. Of course, different people think differently. For some people, decentralization matters most. Yeah, Mohan, tell me.
Yeah, so could you just explain more on the concept of centralization and decentralization, especially for people who are just
Sure.
starting out?
Sure. So when we look at a bank, right, we say it is centralized because the bank is one entity controlled by, say, the government or the central bank. So we call these centralized entities. Decentralization means random people own it. Anybody in the world could be running a node. So the more the different people who run a crypto, the more decentralized we call it. Is that clear?
Yes, sir. Yeah.
Okay. And finally is XMR or Monero. That's a privacy coin. So, most people think that Bitcoin is anonymous. It's not. It's pseudo anonymous. You can still see all transactions, amounts, dates, and addresses on the blockchain publicly. So we say it is pseudo anonymous because you can track people down. Let's say I do a transaction with you and come to know one of your addresses. I can now come to know each and every transaction you have ever done with that address. But Monero and few other such privacy coins, they hide everything. So these are privacy coins. There are quite a few, but Monero is the most important and my favorite. So these are the 20 that I follow. I don't follow any others other than the new projects that keep popping up. But amongst the ones that are already listed, these are the only 20 I look at. Any questions?
None,
All
sir.
clear?
Yeah.
Yeah, okay, great. Okay, then I'd
There's a
like
question,
to.
sir. There's a question.
Tell me.
Harsh.
Yeah, Harsh, tell me. Yeah, Harsh, you have a question? I think he's not able to hear us.
So you
Harsh,
can
you can
proceed.
ask your question.
Okay. Harsh, you can always, once you connect back, you can ask me.
Yeah.
So having understood this, now let's take a slight deep dive into, say, one crypto. So let's pick Bitcoin. Now, when we look at a particular individual crypto, naturally, one of the most important things is going to be the price. And the price is something which is changing every few seconds, but we keep trying to follow that. And one important metric, so a dashboard that I have here is in the last 1 hour, how has the price changed? 24 hours, 7 days, 30 days, and 60 days and 90 days, right? So usually we can look at different parameters. I hope it's clearly visible to you guys on the screen. Is it
Yes,
visible?
sir.
This entire, yeah, okay.
Yes, sir.
So when we look at it, we realize that, okay, in the last 1 hour, Bitcoin's down a bit, but look at it from 90 days, 60 days, it's been up quite a bit. So don't listen to the media which goes on and on, oh, Bitcoin is crashing, it is this. Just look at actual statistics and figures and don't get psyched out by what the mass media keeps trying to convince you. And when you look at this, you realize that it's been a very good year for Bitcoin. So if you consider what the year started with to what we are right now, there's been a huge return that everyone's got. Then we look at something called the circulating supply. Circulating supply means the number of coins or tokens that are in public hands that people like you and me can trade in. We call that circulating supply. And for Bitcoin, that is 18.8 million as of right now. And this number increases every approximately 10 minutes. So when Bitcoin was very new, every 10 minutes, which is when a block comes in, 50 new Bitcoins were created. This was for the first 4 years. After that, That amount became 25, 12 and a half. Right now it's 6.25. It will keep getting halved every 4 years till the year 2140 AD. By when no new bitcoins will be created, all 21 million would have been mined, zero would be the new number coming, and miners would only earn based on transaction fee. So that's the meaning of circulating supply. Any questions? Okay.
So what's the logic behind why it goes to zero again?
So what happens is whoever invented Bitcoin, they wanted it to be non-inflationary. So just like normal currencies, government can print as much. Bitcoin is fixed by the algorithm. So they decided that Bitcoin will always be a fixed number. So 21 million is just a random number they picked up, and they said this is the final amount. And all these Bitcoins were not created on day one. Every 10 minutes, they are being created. And that's just the way they chose to do it. And that's why the total is 21 million. And it will reach that figure more than 100 years from now. And already 18 million out of those 21 million have been mined. Does it answer your question?
Yes, sir. Thank you.
Total supply is how much of that crypto is created minus how much has been burnt or destroyed. So from time to time, the people running a crypto project can delete the cryptos to reduce the quantum available in the market. So it's a simple demand and supply. If the supply goes down, logically the price goes up. A classic example of this is Binance. So when they first came out, the white paper said that we are starting with 200 million coins. Every quarter, we will destroy a certain number till we reach 100 million. So Binance continues to burn it. So that is where the concept of total supply comes in. But in Bitcoin, there is no concept of burning. So circulating supply is always equal to total supply. And maximum is how much can be created ever. So in Bitcoin, it's fixed at 21 million. In Ethereum, there is no limit. So the Ethereum team could decide to suddenly come out with billions of ETH. Nobody can stop them. So some cryptos are finite, some are infinite. Is that clear? Then we have volume, which is how much of that crypto has changed hands in the last 24 hours, but calculated in dollars. So that's the volume. Market cap is how many cryptos multiplied by the current price. So 18 point so many million Bitcoin multiplied by the $55,000, and you get the result as the market cap. VMR stands for the volume to market cap ratio. So 24-hour volume divided by the market cap. And velocity is 24-hour volume by circulating supply. So these are some of the most common metrics that we use when we analyze any crypto. Questions? All clear?
There are no questions, sir.
No questions, sir.
Okay. Yeah. Then we can map all these statistics on a graph. So we can see, okay, over the last 7 days, how's Bitcoin's velocity moved? How have the prices moved? How has the market cap moved? The volume? Then we also see, yes, Professor, you have a question for me?
Hi. Well, please don't call me Professor I. That's a title. I mean, that's a name. It's there because I do a lot of outreach sessions. I had a question about the inflationary part of Bitcoin. You mentioned that the number of Bitcoins is fixed because the person who invented didn't want it to have inflationary tendencies, right?
Right.
Now, okay, the way I'm understanding it, if the US government 100 years ago decided that they will only print $1 billion, nothing more, and that's the amount of dollars in circulation for the last 100 years, the number of goods and services today we have is much more than we had over 100 years back. So
Right.
the value of the dollar would have continued to drop. It does not make, I'm not able to get across, because the way I understand, even currency is like a good and has to number of units has to change according to supply and demand.
Sure.
So why?
Very good question. Let me explain that. Yeah. So for those who are not familiar with the concept, inflation is the fall in the value of money or currency. So let's take a simple example. When I was in college a long, long time ago, I could get an entire tank full of petrol for my bike for 100 rupees because petrol was 10 rupees a liter. Now, suppose at that time, I locked a 100 rupee note in a drawer. X number of years ago, I could get 10 liters of petrol. Today, I get 1. because petrol's become 100. So what's happened? Has petrol become more expensive, or has the rupee become cheaper? Right? Now, when we look at the global level, because the dollar is the global currency, all mostly international transactions are pegged in the dollar. So automatically, the government of the US keeps printing more, or rather keeps electronically creating them. But when you compare it with the Indian rupee always falls against the dollar. So that's the reason we have to understand that there are two complicated stories at play. One is the value of the US dollar in the US itself, or for international transaction. And the second is the comparison between the Indian rupee and the dollar. So when you look at it from an Indian, you will feel that the rupee is always falling against the dollar. And that is why I recommend to people, on the crypto market, you can buy the dollar by way of a stable coin. And then you can get 14 to 15% per annum rate of interest on it. Today, you cannot get that on the rupee also in India. So instead of keeping your money in rupees, translate it to a stable coin and then get 14% on top. So every year you'll end up with 5 to 10% increase because the dollar value increased against the rupee. Plus you will get this 14-15%, and you may actually end up with a 25% per annum return. So even though the US government continues to print more dollars, the value of the dollar is not falling because it is global reserve. So those rules don't apply to the US dollar, they will apply to everything else. But because everybody in the world chooses to keep the US dollar as the global reserve, their prices are not being affected. So they're in a very lucky situation. Does that answer your question?
I'm trying to understand. So I'll get back if I have follow-up.
Sure, definitely. Then we also look at the return on investment. So in the year 2011, if you had bought on the 1st of the year and sold on 31st December, what returns would you have got? So we can map that across, and you'll realize that the best year to hold Bitcoin was 2013. It gave a return of 5,394%. Whereas now the returns are much lower, because see, the value has also gone up so much. Right now at $55,000, it's very difficult to expect a 50x change. Well, that did happen in 2013 and all, when the prices are much lower. And it is this kind of a thinking that draws people towards meme coins like Doge and all, where it is 0.00001. So many zeros are there. So the human tendency is, ek dose to zero change ho hi jayega. So you'll end up with a 10x or a 100x return. But I wouldn't recommend that as a very long-term strategy to think. But yeah, that's the way it works. Any questions on the ROI part? Yes, no?
No, sir. No questions as of now.
Okay. Then we can also monitor and measure based on different parameters. So suppose, I'll ask you a question. What do you think? Does social media impact prices of Bitcoin? So you can actually measure that. So for example, let's talk about, say, Twitter volume. And then we can see, what has been the impact of the prices and market cap and volume of Bitcoin to Twitter volume about it. So you can see here the charts are there. So like this, you can generate n number of charts where you are going to try to monitor which crypto is impacted by which social media platform. So after you read it, you suddenly begin to realize which cryptos are actually affected by social media and which are not. And you'll realize a very different trend in whether it is going to be Twitter that is going to impact it, or it is going to be Reddit or YouTube. And for different cryptos, different social media platforms impacted. So there was a time Bitcoin was heavily influenced by Reddit, or Dogecoin heavily being impacted by Twitter. So, but you can actually measure all this. It's no longer just arbitrary. You can actually do a proper measurement with various kinds of parameters here. Yeah, someone has a question, Tami?
Yes, sir. So you just mentioned that social media affects the prices of some cryptocurrencies. So I believe that because cryptocurrency and blockchain is a fairly new concept, people don't completely understand it. And because of that, there's scope for manipulation through social media. So do you think that social media affecting the value of cryptocurrencies will remain a constant throughout, like over the years, or do you think it will reduce as time goes on?
That's a very good point. I think it will increase over time, because what is beginning to happen is now we live in a world of social investing. Last year, I think during the lockdown, you must have heard about GameStop. I mean, that was a completely dying company. and some crypto guys suddenly realized that a hedge fund is shorting it. And they said, you know what, let's get together and start buying. And suddenly the rate shot up and that hedge fund actually went broke and lost billions of dollars. This was one of the first times in the world that a random group of people came together to invest. So what used to happen earlier with hedge funds and mutual funds and other funds, now even individuals are doing, and I see that trend increasing. So I believe in the future, social will impact it even more because people will now start buying in groups. Like I'll give you a simple example. Let's say that right now there are X number of people on the call. So we all talk to our groups and we make a group of 1,000 people and we get hold of a low liquidity crypto and start buying. Well, the rates are going to go phenomenally high and then we can sell. So it's actually beginning to make sense to form groups and start buying and selling. And I think that's just going to increase. Which platform will be effective may change over time. So today a Reddit and a Twitter may be popular, tomorrow something else may be popular, but I don't see that going down, I see it going up. And Telegram is a classic example. But unfortunately, nobody can measure it because these are private groups. What you tweet is visible to the whole world, so you can map it. Telegram is not publicly visible, but most of crypto pricing today is being decided on Telegram groups where a large number of people get together. Hundreds of thousands of people get together. Does that answer your question?
Yes, sir. Yeah.
Anything else? Okay. Now,
Not
if
from
we
my
want to
side.
go deeper, okay. So here, when you are in Future Money Wallet, you will see a button called Messari. When you click on it, you will be able to now see a lot more advanced metrics. And here, if you can see my URL, it says BTC. Just change it to any crypto in the world and you'll be able to pull the data here. Okay. So right now I'm showing it to you for BTC. And now we have a lot more data, which otherwise normal people don't even think about. So for example, one of them I would call is volatility. So, everybody says crypto is volatile. But my question is, actually, how volatile is it? Are there numbers for it? And yes. So volatility is a statistical measure. We have formulae with which we calculate it. So you can then actually start to map what has been the volatility of Bitcoin over the last 30 days, 90 days, 1 year, 3 years. And then when you start comparing, you will be surprised to know Bitcoin is not the most volatile. There are some cryptos far more volatile. So again, that's a very interesting statistic that we can measure. Another one I'd like to talk to you about is called the mining statistics. So, there are some cryptos which are proof of work. So somebody called a miner is going to mine them. And then there are proof of stake, mining doesn't apply. But when you are following or investing in a proof of work crypto, then this becomes very important for you. What is the network hash rate? If this is low, then people can launch what is called a 51% attack. Means if the rogue miners hold more than 51% of the mining power, then they can start doing fake transactions or canceling people's transactions. And surprisingly, this happened twice this year to something called Bitcoin SV. So there's a crypto, part of the original Bitcoin family called Bitcoin Satoshi Vision. But the network hash rate is less. So a bunch of people managed to carry out this 51% attack twice this year already. So this becomes a very important metric for POW cryptos. And of course, Bitcoin's huge. And then there is a marketplace called NiceHash where you can buy and sell hash power. Today, if you look at all the Bitcoin mining available for rent, it would compute only 0.21% of Bitcoin. So it's next to impossible to launch a 51% attack as of right now. All the available NiceHash would not even give you 0.21% of what you need to attack Bitcoin. So this is another interesting kind of statistic. Is it clear? Questions?
No,
Yes,
sir.
no?
No, sir.
Okay.
None. No.
Here you may notice something called mining algorithm. So do not compare proof of work cryptos only based on the hash rate. Because if their algorithm is different, then they are not compared. So you can't say, oh, this particular crypto has a very low hash rate, Bitcoin is so much more. But if their algorithm is different, then it doesn't mean anything. That means even with a lower hash rate, they could be very secure. So this is a slightly more complicated metric, which you need to understand how to actually apply it. Another one, and a very, very important one, and probably the most important for Bitcoin, is what are the whales doing? So you must have heard about the term whale. These are people who hold a very large amount of a crypto. So you could say 1%, some people follow a different formula, but those people are the most important to follow. What are they doing? Because when those people move their Bitcoin out of their cold wallets onto the exchange, it signals to the market that a huge amount of Bitcoin is going to be sold, right? Are you guys aware of what we mean by a cold wallet? If not, I'll
No,
show you
sir.
what it looks like. Let me show it to you. Okay, so here we have something at the bottom. Yeah. So, there are various ways to keep your crypto. One is you keep it on an exchange. But the disadvantage is if the exchange runs away tomorrow with your money, your crypto is gone. Because in the crypto world, we say, not your keys, not your coins. That means if you don't have your private key for your crypto, it's not yours, it's somebody else's. They could run away with it. So we can generate, so if I click here for Bitcoin, this is what a Bitcoin cold wallet looks like. It has a private key, which you're going to use to sign transactions and transfer out. Public key, which anybody in the world can see, and address is what you tell the whole world. And then WIF is a smaller version of it. Let's ignore for the time being. What am I trying to say is, when I click this button and I generate this wallet, I'm the only person in the world who has the private key corresponding to it. So now what I can do is, without anything else, I could just tell the world, this is my Bitcoin address. People can send Bitcoins to that and it will keep growing. Whenever I want to transfer it out, I will use my private key. So a whale would always keep his Bitcoin or her Bitcoins in a cold wallet like this, which could be a piece of paper. You can just print it out and keep it safe in your house. Nothing online. But when that whale moves Bitcoin out of this kind of a wallet onto an exchange, what is the signal they are sending the market? They're getting ready to sell. So immediately you can predict how much is going to come for selling in the market. Similarly, when these people pull out from the market and put it into cold wallets, we know now a bullish phase is coming because they're pulling back and holding it. And in the stock market, we don't know this because stock market data is not so openly available. But in the crypto market, on the blockchain, everybody can see this data. That is why it is very important for us to follow. So for example, here, if you go to CoinMarketCap, they will show you at any given point of time which are the top Bitcoin addresses in the world, how much are they holding in terms of Bitcoin and percentage of total. So this one single address right now is holding 1.37% of all the Bitcoins of the world. So these are the top 20. So we always follow their activities also. What are they doing? Is that clear? Any questions?
Yes, sir.
Okay.
So I have a question.
Yeah.
So you just mentioned that the stock market is not as transparent as the cryptocurrency market, but at the same time, the stock market has a regulator, and as we know that cryptocurrency is like unregulated digital asset. So do you think that there's a need of a regulator in the market, maybe now or in the future, and how will it affect the market itself?
Sure. So that's a very good question. Just because there is a regulator doesn't mean frauds don't happen in the in the stock markets. In fact, if we look in history, crypto was born in 2010, but frauds were happening ever since human beings were on planet Earth. So how did all this regulation not stop all the frauds from happening? Today also people break into people's homes, they can break the law. That's been happening forever. So it's a misconception to say that there are more frauds in crypto because there's no regulator. Not really true. Because the whole concept of a blockchain is you are not trusting people, you are trusting code. So Bitcoin is running because of an algorithm on an open source software that everybody in the world can see. So the most brilliant programmers in the world can see the source code, every single line, and they realize that there is no way to mess with it as of right now. But I will be very honest, even blockchains can be hacked, which has happened in the past. So Bitcoin way back in 2010 was hacked once and billions were created, 184 billion were created, but then they fixed it a little later. So you don't need regulators here because the technology is what you trust. Having said that, I believe in a functional approach, and I'm going to come to that very soon, where I will tell you what are the 11 types of cryptos and who should logically be regulating them. Yeah, I'm going to come to that. So this part is clear, how we follow different large accounts, what is it that they are holding and what they are doing with their cryptos. Is that clear? Any
Yes.
questions?
So I would like to follow up on Lakshya's question. So he spoke about the regulation part, which even I had a doubt, like, especially, like countries, especially like India, the government itself is very skeptical about crypto. So don't you think, I mean, do we, like, especially the concept of hackers, do you think they give them enough reasons for them to like regulate it or like monetize it?
Well, have you heard of UPI frauds happening?
Yeah, like, I mean, few, but like, it's not that very.
No, actually, it's much more common because many people are regularly losing money to UPI frauds. The point and bank fraud, so many people's bank accounts get hacked into, share trading accounts. What I'm trying to say is the regulator is not going to be able to prevent such kind of frauds. But I will explain to you where the regulator is actually needed. So there are 11 types of cryptos. And I believe the approach that should be followed is to regulate based on what the crypto does. In fact, that is why I don't like using the word cryptocurrency, because all cryptos are not currencies. You have a question here? Tell me. I think.
Pushin, you can ask your question now.
Yeah, you can unmute and ask. I think he's not able to hear us. Okay, so Pusham, whenever you're able to, you can please ask your question. Now, we should look, or the government should regulate cryptos based on what it does. So for example, the first category is what we call ready money, which is they can be used as a currency. And definitely that should be regulated, because otherwise it could impact the financial stability of a country, right? And things like Bitcoin come into this category. Now let's take an example of a small country called El Salvador, which has become the first in the world to now recognize Bitcoin as legal tender. So what they've done is they've created an app which the citizens can use. The transaction fee is zero. And you can walk into a McDonald's in El Salvador and buy a burger and pay in Bitcoins. So the government is actually regulating it in a certain way. They cannot regulate the blockchain because that's a technology running, but they can regulate how it is bought and sold in their country. And the government holds a certain amount of Bitcoin and allows people to buy and sell in them. So that's an excellent way of regulating Bitcoin, for example. Then there are hush coins or privacy coins. Now, these are usually misused for money laundering and other crimes. So definitely then you need a separate regulator, which is already there in India, which controls money laundering. So it's called the Enforcement Directorate. Yeah, you have a couple of questions. Harsh and Pusham, please tell me.
Yes, sir. When you mention El Salvador legalizing Bitcoin as legal tender, wasn't there an argument that says that they did it to save a flailing economy?
Sure, that is one of the reasons, but that's a good point. That they realized, in fact, El Salvador doesn't have its own currency. Before they started accepting Bitcoin, US dollar was their currency. And now Bitcoin is also there. So now they have two legal tenders. So it's right. Small economies, it is not practical for them to run their own currency anymore. And that is why many of them, like, in Zimbabwe, Indian rupee also works on the road. You get down at the airport and you go out, and a taxi will accept 8 currencies, including the Indian rupee. You go to Nepal and the Indian rupee works. Bhutan, it works. So I believe in the long run, a lot of small economies will actually move on to cryptos, and they will not try to run their own currencies. So yeah, that is the reason El Salvador moved, because their economy is in a bad phase, and they believe Bitcoin could help them out. I hope that answers your question.
Yes, thank you.
Pusham, you have a question, Tommy?
Am I audible?
Yes, you are.
Great. Good evening, sir. So recently you just spoke about following these major addresses which have a major stake, right? So I have a very, very naive question. How do we follow these addresses? What is behind that? Yeah.
Sure. So let's take a simple example. Let's catch hold of this one address, and we could go to a Bitcoin blockchain explorer. Okay. So you could just Google it, or you could just go to blockchain.info. Now, this is an explorer for multiple cryptos. So As you can see here, it works for Bitcoin, Ethereum, Bitcoin Cash. So what I could do is I would go here and I would just enter this address. Okay, now let's give it a few seconds. There. So now it says that this address is available on 2 blockchains, Bitcoin and Bitcoin Cash. I told you these were one and then they split into 2. So now let's click on Bitcoin. So the same addresses work on both the blockchains. And now we can see every single transaction that this address has ever done in its life. And you can see that tons and tons of transactions that it has done. So this is one way of doing it. And secondly, there are many services like, for example, CoinMarketCap. They do this work for you. They are regularly following and talking about it. So one option is you use a CoinMarketCap kind of a site, or second is you directly go to the Blockchain Explorer and you can see what they are doing. So can you see that this fellow has done 655 transactions till now? And how much of Bitcoin they have received, how much they have sent, and what is their balance as of right now. And this data is available to the whole wide world. And then you can see each and every transaction, when it was done, with whom it was done. It's totally transparent and available. Does that answer your question?
Yes, sir. Yeah. So another thing I have to ask is that since you have built Future Money Wallet, right? Is there any component in it which measures the, selling or buying of the Bitcoins from these addresses?
No, not as of right now. I haven't put that in. I've been thinking about doing it for some time, but I haven't had the time, but not yet. As of right now, no.
Got it, sir.
I will do that. So, yeah. Yes, Pusham, you have a question? Are you with us? Or then Khushi, you have a question? Yeah, Pusham, tell me first. Yeah.
That was me, sir. That was me. I was
oh, okay. Khushi, please, what's your question? Yeah, we can hear you.
All right. So we were just talking about how smaller economies would start taking up Bitcoin as a way to sort of regulate their economy. But I was just wondering how viable that is, because just case in point, El Salvador, right? Most of their country doesn't even have access to the internet. 40% of the country, out of which only 4% of the 40% of the country is in poverty, but only 4% of those people in poverty have access to even bank accounts, which is a prerequisite to even participate in this entire transaction process. So given that context, how viable do you think this is for small or even large economies for that matter?
Sure, that's a very good question. Actually, Bitcoin's better for economies where people don't have bank accounts and you don't need the internet for this. So I'll tell you how it actually works. When you and I want to buy and sell Bitcoin, we have 2 ways of doing it. One is we go to a centralized exchange and one we go to a decentralized exchange. Now, when we go to a decentralized exchange, you will realize it takes any transaction happening on the Bitcoin blockchain, we give it 4 to 6 confirmations. But when you go to a crypto exchange, your transaction goes through in seconds. Now you'll wonder, why does that happen? Because what the exchange does is it holds a certain number of Bitcoin with itself, and then whenever its customers want to buy and sell, it directly settles internally without even pushing that transaction on the blockchain. So when a country adopts it, they don't need internet connection. In fact, in El Salvador, they put up Bitcoin ATMs. So what the government can do is it can hold an X number of Bitcoins, make them accessible to all these ATMs without needing the public internet. You just need an internal network and it would work. So how you apply it changes when you try to do it at a country level. And you don't need bank accounts, and it can be actually much faster than what happens to the rest of the world. Does that answer your question?
It does, but just a follow-up question. Like, for example, if you're setting up a Bitcoin ATMs, right? How do you even remove anything from that without a bank account or a card? Like, because it needs to be associated with something.
Sure. It needs to be associated with an address like this. That's all. So when India implements CBDC, Central Bank Digital Currency, which the RBI will in a year or 2 from now, each Indian will get an address which could be your Aadhaar number. And now you don't need a bank account anymore. Similarly, on a blockchain, all that you need is this, an address. So now in El Salvador, every citizen has an address and they can put Bitcoin into it and spend from it. They don't need a bank account. The address does all the work that is required. So whatever is a crypto address does the work of a bank account in the conventional world. So you don't need bank accounts here. Does that answer your question?
Yes, that does. Thank you.
Welcome. Any other questions? Where were we before we shifted here?
There aren't many questions as of now.
Okay, but where were we before this? Before we came on to hard wallets? I don't happen to remember. Oh yeah, we were talking about the types of cryptos. So first is we saw ready money crypto, which is Bitcoin, Litecoin. They come under that category. Open blockchain tokens is a very new concept in the world. The US state of Wyoming has come out with a law which regulates certain types of tokens. And the project I'm working on, we've also registered under that. But I won't go into it because it's not yet mass market. It's a very new concept in the world. Hush coins are privacy coins like Monero. And today they are used for a lot of crime. I'm not saying they are only used for crime, but you could go to the market and buy a knife. Then you could decide to cut sabji with it, or you could stab someone. The knife is not legal or illegal. Similarly, a privacy coin is not legal or illegal. It depends on what you do with it. A lot of people think Bitcoin is what criminals use today. Not anymore. Most criminals would use privacy coins. They don't use Bitcoin for that anymore because Bitcoin transactions can be very easily traced. Then we have application coins or application cryptos, which are specific for a particular use case. Like, I told you about Filecoin, Theta. They are made for one particular project. So a Theta and a T-Fuel is made only for video streaming. Filecoin made only for file storage. So we call those application cryptos. So we are talking about who should regulate. So logically, this should be regulated by the Reserve Bank of India. This should be regulated by the Enforcement Directorate. This actually doesn't come under anyone, and it shouldn't. It's kind of like a loyalty program being run by a company. You fly on an airline, they give you loyalty points, and you can buy food at a restaurant with it. Nobody governs loyalty points. Application cryptos are very similar to them. Then we have security cryptos, which are just like equity shares. They represent ownership of a company. And who should regulate it? SEBI, because all equity transactions in our country are regulated by them. So SEBI would regulate security cryptos. Then we have non-fungible. I'm sure you guys have heard about it. Amitabh Bachchan has come out with his own NFT. So it's an image, a digital image of his, which people can buy. Most of the NFTs today are worthless because they don't give you any specific right. If Amitabh Bachchan's NFT gave me the right to use that image to promote my own product, then I would buy it. Otherwise, why would I buy a stupid looking sticker with his face on it? I may be a big fan, but I have free photos of his all over, which is why I believe most of the normal NFTs are going to fail. Collectibles will work. So you guys are youngsters, so you must be part of the multiverse, where you go to virtual worlds. So when I was much younger, we had Second Life. You could go to that virtual world and buy virtual clothes, virtual land, and actually set up a house there and do stuff by paying real money in the virtual world. Today, there are multiple such projects where you can buy an NFT of a piece of art or a collectible in the real world and then transfer it into your multiverse. Who should be regulating it? No one. It should be a normal thing, like just like you buy a leather jacket from a regular shop, you pay GST on it. Similarly, you would buy a virtual jacket, maybe pay GST and take it into your multiverse. So I believe NFTs should not be regulated separately. Yeah, Joshua, you have a question?
So yeah, it's with regards to NFTs. Don't you think, even for regular crypto exchanges, wallets, everything, you can apply AML checks. But for NFTs in specific, obviously art is subjective, and people can buy how much of it. But doesn't money laundering also take place very easily with NFTs?
That's a very good question, but no, in my personal experience, no. So I come from the cyber investigation background. So for me, whenever I look at anything, the first thing that always pops up in my head is, how are the criminals going to use this? I have not seen any use case of NFTs being used for money laundering because it doesn't make sense. For example, there's this artist called Beeple, you must have heard of, the biggest NFT sale. The point is, somebody has supposedly paid him $50 million for this. But the point is, Beeple now has to pay tax on it, right? If he shows the US government that he's made a profit of 50 million, it's come through a bank account, or he has to put it in a bank account and he pays tax on it. So NFTs are not a good way of money laundering. They are absolutely not a good way because you are identified. Money launderers would use privacy coins. You can't track them down.
No. So that part I got. Like, but you mentioned collectibles, right? Like, for example, CryptoPunks, Bored Ape Yacht Club. Their art, it's just created by a bunch of people, and it's the people who hold it or the community that gives its value. And if you just see the OpenSea source, like just last week, there was a different thing that popped up. It was literally a black image with 2 items, but it was bought for 330,000 ether. And it was a clear thing that people who don't want to get it to their bank account has put it into their NFT and they're just storing it. I mean,
I'll tell you what's
it
happening.
looked like that. So
yeah, actually, these are what we call whitewash transactions. They're not real. Suppose you and I are good friends. I will say make some NFT and I will transfer a huge amount. I'm just trying to fool the world into believing NFTs are becoming popular. I'm not doing money laundering. I'm simply trying to jack up the prices of NFTs and then try to find normal people to buy it. So logically, an NFT is not a good way of laundering. A privacy coin is, but the high price NFTs you see today are just whitewash transactions. You're right. There is no logic for a piece of black art or a black dot to be worth so much money. These are just fake transactions and we need to ignore them. Don't believe the hype that they're trying to create. I hope that answers your question.
The reason I'm asking, so I'm into NFTs from a legal standpoint, or it's fine, right? Like you're allowed to purchase it, hold it.
You're absolutely allowed to. Yes, you're allowed to. So in fact, as of today in India, no crypto is illegal. Remember, the law doesn't tell you what you can do. The law tells you what you cannot do. So for example, is there a law in India which says I can use a gray colored pen? No. The law says that if you're buying and selling pens, this is your GST, end of story. So similarly, there is no law in India which says that you can buy NFTs because there is no law saying you cannot buy. So as of today, all cryptos are equally legal, right? And I'm hoping in the future they will get regulated based on what the function is that they perform. So as of today, there's no issue. You can definitely buy and sell NFTs. Just remember one thing: you have to pay tax on a profit that you make. If it's a long-term profit, pay capital gains. Short-term, pay business taxes. Go to your CA for it. As long as you're doing that, you are not doing anything illegal. Does that answer your question?
Got it, sir. But one more aspect of NFTs. Right now, NFTs are evolving, right? Like people are saying that because of the proof of ownership that it carries, there's multiple uses that it can carry. Like you mentioned, Amitabh Bachchan, you can hold it and you can advertise with it. So the same
he
thing
doesn't allow you to advertise. If he did, obviously, it would make sense. Otherwise, no. Yeah.
But yeah, potentially this proof of ownership concept can be used for ticketing sales or entries into specific events. But now that's also sort of evolving into dividend shares, for a particular platform that's running. So now we're having a piece of art now that's sort of like, it's giving you a dividend share. It's sort of delving into the DeFi aspect of it. So if NFTs sort of become eventually an option for an investment option, like right now we see heavy regulations in the US after the ICO bubble that happened. This heavy regulation for all ICOs. Now, if an NFT potentially gives you access to a particular launchpad, now that essentially will become a security itself, right? And that security aspect of when an NFT is considered a security and when it's not, won't the regulation come into play in that aspect?
So that's a very good point. So the reason the US government is against it, because they say it is an unregulated securities issue, which is why when we come out, so let's say as a company or as an startup, you are launching your own token, you need to make sure it doesn't behave like a security. So it should not give ownership rights. It should not give profit sharing rights like dividends. The moment you do that, it's considered a security and it would be illegal under Indian law, because SEBI and the securities laws say that you need to register and follow certain norms if you are going to do an issue of securities. So as of right now, a security raise in India would be illegal because SEBI already has laws. So you need to make sure what you're buying is not a security or what you're selling is not a security. NFT actually is not very different from a regular token. In a regular token like Bitcoin, you have 21 million Bitcoins. In an NFT, each thing is one only. So there is one jacket or one gun or one piece of land. And that's the reason we call it non-fungible versus fungible. The meaning of fungible is when all units of something have the same value, it's called a fungible asset. If only one unit is there and each unit is exclusive, it's called non-fungible. The difference is a very minor difference. What you need to question in your head is what rights does it give you? So if I buy Amitabh Bachchan's NFT and it gives me rights to use it for my own business, it is not a security. But if I buy it and it gives me, say, I am buying a part of a painting and then there is going to be rental income which I will get a share of, it may come under security. So you need to see what is the use case, not whether it is a non-fungible or a fungible token. What does it actually do? And in the US, they have something called the Howey law, which they apply for criteria. In India, you have slightly different, but the criteria is more or less same concept. Is that clear?
Yes, sir. Got it, sir. Thank you so much.
Okay. KJ, what's your question?
Yeah, so Beeple sold his art collection for say 69 million, etc. So could he have sold it again, right?
That's a very good question. So what Beeple has done is he has said that this art relates to one token on one blockchain. Now, if you remember MF Hussain, one of India's most famous artists, he used to sell reprints of his art also. But behind in the reprint, there would be a number, and that's an exclusive number. So he would say, I'm going to sell only 20,000 reprints, and each comes with a unique number. But if he sold 100,000, we could do nothing. Same is the case here. People could sell it to 10 people and no one can do anything, which is why these kind of NFTs make zero sense to me. When it is a collectible, the blockchain technology ensures it cannot be duplicated. So when I buy a jacket, I know there are only X number of jackets and nobody else can get them. But in Beeple kind of arts, you are absolutely right. That can happen. And that's why I don't find any sense in it. Hope that answers your question.
Yeah, so I had a plan previously that since I do photography, I was going to sell my portfolio as an NFT and as a raw file, so people could buy it again and again. Eventually, I would gain more money out of it. But then, is it like a worthy plan to?
No. So if you want to sell that to multiple people, then ideally you would do it as go to a stock website like a Pexels or a Shutterstock and then sell it there. But if you want to make an NFT out of it, we've got to give something unique. So suppose you take a particular raw file and you sell that only to one person. Or you say on day one, only 10 people can buy it or 50 people can buy it. And if you honestly keep it like that, then it can have value. So that's your reputation at stake, because once you pull a fast one, nobody will trust you ever again. So if you do it the right way, you would choose a blockchain and issue only once. And then say only 50 people in the world can use it, or only 10 or only one. And then, yeah, it can definitely sell. I haven't seen your photograph, so I can't comment without that, but definitely you can do it. And ideally, you should have a good social media backing to be able to do it, because it's your fans who are ideally going to buy it from you. So if there are people who are fans of your photography, they are the most likely people who would buy it. I hope that answers your question.
Yes, sir.
Okay. Anyone else? Harsh, do you have a question?
Yes, sir. So when it comes to cryptocurrencies, they aren't illegal. So they are unregulated as far as I know, correct? So technically, the government tomorrow can come out with a notification and say that they can be illegal, they are illegal, and anyone trading in cryptocurrencies would have all their money stuck, especially if they're using a national exchange. In that case, their money was practically zero. So the alternative to that would be to use an international exchange and then have the money transfer to someone else's account where it's legal and then transfer. Isn't that a big headache? Isn't it wise for new investors to wait for proper regulation before starting with crypto?
Sure. So I've been hearing about the government banning crypto for several years now. It hasn't happened. And if the government regulates, which I hope they will very soon, they cannot call all crypto under one category. They will have to go functionally, because you cannot legally define a crypto. Like you cannot come out with a legal definition which will bring all these 11 things into one. So what the government will be able to do is, it will say that anything which works in this manner would be regulated like this. They cannot make one all-purpose section for it. So, and even if they do come out with it, it's not going to be overnight. That suddenly one day they announce it. They will always give you a few months time to do all this. Plus, honestly speaking, I don't see that happening, because the media has been talking about this for, I think, several years now. I don't worry about that. If at all the government decides it's going to happen in a very phased manner, they would come out with a law, give people 3 months to comment, which is a standard process in new laws. And then it would be introduced in the Rajya Sabha, then it would take time there, then go to the Lok Sabha. It's a long process. From day one to passing itself would take several months. So no, I'm not worried about that part. Any other questions? Then there are algorithmic stable coins. They try to maintain a standard value. You guys are able to see my screen, right?
Yes, sir, your screen is
Yes, sir,
visible.
your screen is
So
visible.
an algorithmic stable coin is not backed by anything. It is backed by an algorithm, and which tries to maintain a stable value by constantly changing certain things. In my personal opinion, they are horrible because most of them have been cracked in the past. The technology is not robust. So I stay far away from algorithmic stable coins. Then you have things like governance coins, which is where you're buying voting power. So Uniswap is a very popular project. Their crypto is called Uni, and it only allows you to do one thing, and that is governance. So voting in how Uniswap should evolve. So that's a whole category of tokens called governance. Then there are public blockchain natives. So Ethereum has ETH, Cardano has ADA, and you can use these cryptos to pay transaction fee. So they have a very strong use case. So for me personally, this is the number one kind of cryptos that I personally like, because as a developer, I use these blockchains. I need to have these tokens. So I know there is a genuine use case. So they are my favorites. Asset-backed crypto is when you take a real-world asset and tokenize it. So for example, Binance and a few others did this, where you can today buy Amazon, Netflix, Google shares on the crypto market also. That is why when you log into the Future Money wallet, you will see here, yeah, can you see Amazon prices, Apple prices? These are not stock exchange prices. These are tokenized share prices. So somebody in the world has bought these tokens, shares, kept it with a custodian. Against that, they issue tokens on the blockchain. So anyone in the world can now buy Amazon shares. Otherwise, you have to be an American citizen or have an account with an American brokerage firm. Otherwise, you can't buy it. But on the blockchain, all the top stocks are available. So that would be an example of, where were we? Yeah, that would be an example of an asset-based crypto or a wrapped asset. People are doing this for gold. They're doing it for so many coffee. So that's a wrapped asset. Yeah, you have a question? Tamil?
Yes, sir. So my question is, you just mentioned that shares can be bought in the crypto market. So the way the shares are governed and regulated, and the way the share prices are affected in the stock market, so is the same thing carried over to the crypto market when these shares are traded there as well, or is there something a difference or
That's a good question.
in the way they are affected?
Sure. So in the share market, it's a one-step process. You directly go and buy the share. In the crypto market, it's a two-step process. The custodian first buys the shares and holds it, then gives you the right to buy a crypto connected to it. Depending upon the custodian, they may give you the original share if you want it, or they may say, no, we will not give it to you. You can only sell the crypto to someone else, but the share is held by us. So these are two ways it can be done. Have you guys heard of GDRs, Global Depository Receipts, American Depository Receipts, Indian Depository? Same concept. Do you realize what an IDR or ADR is? Rediff was the first company in India to do it. They were not listed in India. They directly listed in the US, but they were an Indian company. So a custodian held their shares and issued receipts on an American exchange. That's the exact concept that happens in a tokenization. Yeah, Joshua, tell me.
So yeah, just to follow up on Lakshya's question, it sounds like tokenized stock is nothing more different than CFDs, where they hold your thing and you just trade the asset itself. So what's the difference really? I mean, you can just trade CFDs only instead.
What's a CFD?
Contract for difference. So you don't own it. You just go on the exchange.
No, very different, completely different. See, in a contract, you are only getting the price difference. So it's a derivative. But in a tokenized share, somebody is actually holding that share. So if Amazon has a total of 1 million shares, there cannot be 2 million tokenized shares because there aren't that many Amazon shares. But in a derivative, the original company has only 1 million shares, but you can have 1 billion derivatives around it. So CFDs are derivatives, totally different from a wrapped asset. Hope that answers your question.
Yes, sir. So doesn't that mean that the whole derivatives market is just an insanely big bubble?
Yeah, that's a very good point. The 2008 financial meltdown was because of derivatives only. And that is why right in the beginning of my session, I told you, unless you're an expert, don't get into derivatives. I'm very scared of derivatives because in the world today, there are believed to be multiple quadrillion dollars worth of derivatives, whereas our entire global economy is just in trillions yet. So yeah, I'm quite scared of derivatives and the damage that they can cause. But then, well, there some of them are good. Like you have options which you can use to hedge your investment. But there is so much of speculation that happens in derivatives, and you could end up losing your entire capital. Hope that answers your question.
Got it, sir. Thank you.
Anyone else has a question at this stage? Okay. And finally, we have lending, borrowing, crypto. So you can, on the crypto market, one of the biggest DeFi use cases is borrowing and lending of crypto. So there are some cryptos like Aave which only do that. So they have a platform which facilitates this borrowing and lending, and their native token is called a lending or borrowing crypto. So these are the 11 types of cryptos that we see in the world today. Any questions?
So I just need a clarification. So what is the color behind the, on the bullet behind these types of cryptos?
Yeah, sure. I'll explain.
Represent?
So I've developed my own crypto valuator. Okay. And very conveniently, it revolves around my name. Most of the things I do, I try to put my name into it so that no one steals my ideas. So I have created the valuator which values on 5 things: revenue, organization, history, algorithm, and social parameters. So this is actually the login for it. It's in the Future Money wallet, and I'll show you what it looks like. But when you use this, I want you to be sure that you cannot use it for the ones which are in red, because the algorithm that I have developed doesn't apply to open blockchain tokens, NFTs, or algorithmic stablecoins. It applies to all the others. So out of the 11 types, my valuator applies to 8 of them. And that's why those are in the green. So if you want to use my valuator, please do it only for the green ones, not for the red ones. That's what it signifies. Any questions?
Joshua, you actually have a hand up. Do you have a question?
No, I just forgot to put my hand down. Yeah, sorry.
Okay. So if you guys log in here, you will be able to, one sec. Yeah, so in the valuator, you will be able to enter the symbol and name of any crypto and then calculate its value based on certain parameters. I'll just probably show you a sample one. I think SOL should work. Yeah, so as per my calculation, SOL should be $1,047. So when you use my valuator, there are 15 different questions that you answer. Based upon that, it calculates all these graphs and gives you a detailed valuation. We don't have time to go into it right now, but you can just log into Future Money Wallet, go to the valuator, you answer those questions, click a button, and it'll give you a valuation. So far, I mean, this valuation method, I keep improving it over time. The next major upgrade will happen in November, but I'm quite happy with the results so far. So that's the reason that some of them were in green and some of them were not. Before we end, there's just one small thing I wanted to cover. So I also believe in the concept of making your own indexes and stacks. So instead of going for one crypto, you go for a bunch of them. So for example, I've created something called the blockchain stack. So that comprises these cryptos in a particular weightage. So all the public blockchains which I think have a potential, I club them together, and I've realized when you do that approach, the returns are much higher. So they started in June, I think, this particular stack at 100, and a few months later, despite so many crashes in the market, it's at 216, which means your money is more than twice. And that's the reason I believe in taking this kind of an approach. When you go for just one crypto, you are actually, it's a riskier proposition. When you bundle some of them together, so like I've created one for the privacy coins, one for the Bitcoin family, one for the blockchain stack. So there are many such things. I think it gives a much better return. So again, you guys could try it out, and you should develop your own, depending upon your way of thinking and your analysis. Yeah, Harsh, tell me.
So this was my question, like how can we try it out? Could you elaborate a little on this?
Yeah, so one option is you directly see the ones that I've created. So there's a whole bunch of them. So there's the Bitcoin family stack, which does Bitcoin and its popular derivatives like LTC and others. Blockchain stack, which I just showed you, has 10 blockchains or 9 of them. Crypto 2 stack is only Bitcoin and Ethereum. Currency stack, because that's another very interesting thing. So if you want to bet on currencies, so I made a stack of the top 4 currencies of the world as spec to the US dollar. If you want to do it with metals, then gold, silver, platinum, palladium, and other metals can be used. Privacy stack is only the privacy coin, and stock stack is the top 10 companies in the world that I think are important. So Amazon, Netflix, Google, PayPal, and those 10. So one option is you can look at these stacks and try to do it on your own, follow them. Then there is the crypto index and the future money index. So these are where in the future money index, I'm saying, why should we only measure one kind of an asset, which is crypto? Why not make a portfolio which has shares, cryptos, currencies, metals, all put together? That is a very slow moving thing. But even in the worst of the crypto crashes, the value of this index didn't go down. So I've built that around corporate money, which is shares. Then all the details are here. So you can see all the things that I put in, which are the shares or companies in that, individual money, intrinsic money, which is gold, palladium, platinum, and silver. So, I mean, it's quite a bit to discuss over a short term, but you can go through all this. And then I have something which a lot of people find very nice, which is the crypto index. So that's based on these 20 cryptos that I follow. I made an index out of them. And again, I find that that performs pretty well, much better than just going for one crypto. Yeah, Harsh, you had a question?
Oh, no, sorry, I just forgot to lower my hand. Sorry.
But what I do is, what I would recommend is if you're going to go to this, then please monitor on an hourly basis. So that is why you will see here, I'm trying to monitor it on an hourly basis. So every hour you look at how the prices are moving. And I don't believe cryptos are very long-term yet. So you should monitor your portfolio at least 5 or 6 times a day. I know that's a lot, but then that's the only way around it, because crypto prices could rise and fall really fast. So you've really got to keep your ear to the ground to succeed in this. So I think that's more or less what I had. We are at the end of our timing anyway. So if you have a couple of questions, we could take them. Other than that, let me just stop the sharing. Yeah. Other than that, every Saturday at 2 p.m., I do a live session on Twitter. 3 p.m. I do Insta Live, and 4 p.m. I do Clubhouse. So feel free to join in. These are all free sessions every Saturday. And I run a free course called Get Started with Crypto. Just go to my website, rohasnagpal.com. Get Started is a link. You don't even need to log in. I don't need your email IDs. I don't collect people's data. It's a completely free course. You can just take it and learn. I'd recommend do that course before you actually put real money. And I look forward to seeing you guys on a Saturday live session.
Sir, could you please tell me the name of your website once again?
Yeah, sure. Can you enable the chat? Maybe I could just put that in. Or let me just open it up here. So it's rohasnagpal.com, ROHASNAGPAL.com. When you go here, right on top, do you see this thing called, no, I'll have to share my screen. Just give me a second. Okay. So it's called rohasnagpal.com, and there's a link on top which says Get Started. So when you click on that, yeah, so this Get Started link will open up the course for you, and it's divided into 13 lessons, and then you can go to each lesson and just click on Start. You don't have to even register or log in. So I'd strongly recommend that you guys go for this, and I'll try to put the URL in the chat. Yeah. So in the chat, I put the link, and you can just start with that.
Got it, sir. Thank you.
Most welcome. So it was great interacting with all of you guys. I hope to see you in the future. Bye.
Right. Thank you, sir, for delivering this absorbing and informative webinar. As in, like, personally, as an aspiring investor, it was a great learning experience for me to know about, like, firstly, like, topics like market capitalization of cryptocurrency, or the INR trading trends, or centralized and decentralized cryptocurrencies, the types of cryptocurrencies, the velocity, and like loads of other things that you just mentioned. I would like to thank everyone. Thank you all for joining us for this webinar. We hope we added value to your knowledge about investment. Stay tuned. A lot more content and exciting events are coming your way from the Jindal Investment Society, and we hope to see you there. This is me, Lakshay, and my partner Mohan, and signing off as your host. And thank you again, sir.
Bye.
Guys, the webinar has concluded and you all are free to leave now. Yeah.